Imagine you could have a professional broker to manage your funds for you, investing into different asset classes like stocks and shares, currencies, foreign stocks, and etc. And the best part, it might not even cost much. So in today's video, we'll be looking at the things you need to know about unit trusts. Welcome once again to the channel. If you are new, thank you for stopping by. If you have been a long time supporter, thank you for the constant support thus far. So just a small little favor that I need, that if you can push that like button down below, it will help the channel a lot with the YouTube algorithm. In the last couple of days, I had a conversation with a friend that mentioned, hey Jordan, you should invest into unit trusts. You know, it doesn't cost much, returns are high, and they are fairly safe. This led me to doing some research on them because I haven't invested into any unit trust at the point of recording. And I would like to break down what a unit trust is so that you guys are able to understand what they are as well. So basically, a unit trust is a portfolio of stock, bonds, property, cash, and other assets. Usually they're chosen by a professional fund manager depending on the team, industry, or style of investing. What happens is that the fund manager buys these assets on behalf of the fund, split them into equal units where investors like me and you are able to purchase them, and this fund is actively managed by their professional fund manager. So some of these fund managers include fund houses like BlackRock, Fidelity, Franklin Templeton, who offers different kind of funds. So I interrupt this video just for a little bit. This is not a sponsored video by any of these fund houses or the fund managers mentioned here. These are just merely for example, and we are going back to the video. So for example, if you look at this fund, which is the BlackRock Asian Tiger Bond, this fund aims to maximize total returns. Being an Asian bond, it covers countries like South Korea, China, Taiwan, Hong Kong, Philippines, Thailand, Malaysia, Singapore, Vietnam, Laos, Myanmar, Indonesia, Macau, India, and Pakistan. That was a mouthful. Whew. And the current price for the bond fund is at $9.50 as of recording. But when the fund was launched in 2014, it was priced at $10. However, this fund also pays a dividend of 3 cents per share, which can be reinvested to purchase even more units. So what's really important here is to take note of the charges here. There is a maximum initial charge of 5% and a management fee of 1%. So basically, with a unit trust, you're able to see who your fund managers are. In this case, they are Nirja Seth, Arthur Piasecki, Ronald Gangley. I'm not sure if I got the names right, but I tried. So these are real people managing the fund, and the management fee that you pay goes to the company, which in return pays them a salary of sorts. So right now you might be thinking, it sounds pretty similar to an ETF, but what's the difference? So basically, an ETF tracks a public listed asset, usually a group of shares or an index. The ETF is not actively managed, but it's more of a passive approach. So with ETF, entry prices are pretty low. Like the STI ETF is like $3 a share, and a minimum purchase of 100, which means it's like $300, as compared to a unit trust, which requires a minimum of $1,000 for this Asian bond fund. ETFs also have an expense ratio. Like the expense ratio for the STI ETF is like 0.3% versus the 1% management fee, and we do have to factor in trading fees, which ranges from like 0.08% to 0.125%. If you would like to have a 0.08% trading fee, do check out Tiger Brokers. I have left links in the description down below where you can get connected with them. They provide you I think free trades right now if you're signing up with them with the referral link down below. But that's not to say that unit trusts are bad. With unit trusts, you get diversification into different asset classes, unlike ETFs, which only focuses on one class. Like unit trusts have gold, real estate, and bonds. There are some unit trusts which have a basket of bonds versus an ETF, which is only constrained to one asset class. So when it comes to diversification, the ETFs allows you to play with only one kind of asset class, and building a portfolio around it can be pretty challenging. With the limitations of what's available in the market, you might not be able to get the asset that you want into your portfolio. With unit trust, it provides you the flexibility to build a portfolio of your own choosing. So if you're looking to invest in a specific niche that no ETF covers, a unit trust might be the way to go. So let's look at the liquidity of ETF versus a unit trust. Since an ETF tracks an underlying security and is being traded on the open market, it means that I can easily sell my ETF today and it will give me cash within the next 2 days depending on your broker. But with unit trust, the trading mechanism is very different. Prices are only derived post-market or at the end of each trading day, and you'll get a price per unit. And at the same time, unit trusts have entry fees, exit fees, switching fees, and etc. So this makes unit trust much more costly as compared to an ETF. Like every other investment instrument out there, all of these instruments have their pros and their cons. What matters is having a plan to your own financial goals. And if you haven't heard, I'm running a challenge on my channel where we'll be investing $250 every single month into a stock, and we'll see where it gets me by the end of the year. So I hope this video have given you some value, and hope you understand what's the difference between an ETF and a unit trust. And if you're looking for a broker that allows you to buy some funds, to buy some ETF, do check out Tiger Brokers. I've left a link in the description down below. They have a lot of goodies for you guys right now. If you have enjoyed the video, do drop a like, subscribe if you haven't, join me on my Discord channel. We have pretty interesting conversations there, and I'll see you in the next episode. Bye.